new approach towards the moving average. The new approach towards the moving average. Before going to that things, we will know that why we follow moving average. What is the meaning of that moving average? So second, the best moving average what we can utilize for intraday trade. Best moving average for the trend forecast, and how we can utilize moving average along with the volatility or Fibonacci ratio to improve its performance. These are the things we are going to learn today. So if I just say that why we are following moving average. So many of you knew about the moving average. Suppose if I am saying that 5 days moving average, 5 days moving average or exponential moving average EMA is greater than the 10 days moving average, 10 days EMA, exponential moving average, or simple moving average also you can take. This says trend is up. This says that your trend is up. Trend is up and prices are in the uptrend. Why so? Why not it is downtrend? Simply it is above 5 days moving average, is above 10 days moving average, then only I am saying that trend is up. Why? What is the reason? So just understand this concept in a very, very layman's concept. You can say 10 days before, because everything is going through a demand and supply. Suppose 10 days before, 100 people come to the market and they bought Nifty, say at 8,500. 10 days before. 9 days before, again some 100 or 150 people have come, so they bought it on the 550. So like this way, this process is going on. So this process is going on. So 10 days before 100 people have come, 9 days before 150 people have come, say on the 8th day some 500 people have come or bought the Nifty, say on the just 1 day before some 1,000 people have come and they bought it. So 5 days before, 5 days EMA says that people who has bought Nifty 5 days back, 5 days back, people those who have bought Nifty, they bought at a higher price. They bought it at a higher price as compared to the people those who have bought the Nifty 10 days back. So people those who have bought 5 days back, they bought the Nifty at a higher price as compared to the people those who have bought the Nifty 10 days back. That is the meaning of this 5 days exponential moving average is greater than the 10 days moving average. This also says that whenever prices are going up means what will happen? Demand will be more. So this is the things if you have, so you can say now mango is trading at 150 rupees per kilo. So that has two meaning for me. One, either the supply is very less or the demand is very high. Say rice is putting at 100 rupees per kilo now, which was 80 rupees say 10 days back. So then I can say that either the supply of the rice is lesser or the demand of the rice has gone up. So as far as the stock market is concerned, we do not have any scarcity in the supply side. Supply enough we are getting. Enough supply we are getting. What is the laxity is lacking here? The things which is lacking here is the demand. Supply is always there. Whatever if you want to buy 1,000 lots of Nifty, you can always get it. Somebody else will sell to you. It's a huge market, huge money is there. So you can say that supply is not a constraint. Whenever the demand picks up, the prices goes up. So this says that whenever I am saying that 5 days EMA is greater than the 10 days EMA, this says that majority of the people or the number of people bought Nifty at a higher price is more as compared to the number of people those who bought it at a lower price. So that's why I am telling that the trend is up. So trend is up. Because more number of people bought the Nifty at a higher price. Maybe that more number of people are the people of our financial institution, people of our mutual fund industry, people of our HNIs. So this is going for an uptrend. So whenever this 5 days moving average is less than the 10 days moving average, I am saying that the trend is bearish. That means majority of the people are selling now. They are giving whatever they are owning, they are selling it off, or they are the seller, whether they are selling in the future or the stock, whatever may be the case. So majority of the people in the favor of selling the things. So whenever the sellers are outnumbered by the buyers, the time trend is down. Whenever the buyers are outnumbered by the sellers, the time trend is up. That's why we are following moving average. Now come to the exact subject of moving average. So what are the types of moving average we have? What are the types of moving average we have? So we have very broad category of moving average. We have a simple moving average. We have a simple moving average. We have exponential moving average. We have displaced moving average. So these three category of the moving averages are there. Other types of moving average: time series, triangular, variable, volume adjusted, weighted. So all these things are the other types of moving averages there. So simple, exponential, displaced, these three moving averages are used very frequently for our trade decision process. As far as the displaced moving average is concerned, it is a parameter which is highly used for intraday trade decisions. As far as the simple moving average and exponential moving average is concerned, this is highly used for our trend forecast. So for trend forecast, we use this particular moving average. So this is what the meaning of our moving average. This is the use of the moving average. So I will just start my discussion with the displaced moving average, then I will go to the simple and exponential also. So here for calculating that also we require the simple and exponential. Whenever I am telling about the simple moving average, say 3 days simple moving average means past 3 days closing prices I will take, divide it by 3. So this is the simple moving average of the 3. So if I am taking the exponential moving average of the 3 days, then what I have to do? Whatever the exponential moving average I have got before previous day, because first record nothing will be there, that is equal to your simple moving average only. From second record onwards, it will start in this order. Exponential moving average will be calculated. Whatever the last traded price of the current day for which you are going to calculate the exponential moving average, that price you have to take. You have to subtract it from the previous exponential moving average, and you have to multiply with one factor, or this is multiply with 1.5 you have done. How you have derived this 0.5? This is 2 divided by n plus 1. N is number of days you are taking. So if I am taking 3 days means 2 divided by 4. So 2 divided by 4, which is coming to 0.5. So whatever the results I will get here, means the day for which I am going to calculate the exponential moving average, that day's closing minus the previous exponential moving average multiplied with this factor. Whatever the factor is coming, it is 2 divided by n plus 1. Whatever the result I will get, that result I will add it with the previous exponential moving average. So this will give me the current exponential moving average. So this is how the exponential moving average is being calculated. Once you calculate this exponential moving average, simple moving average, exponential moving average, then how we will calculate the displaced moving average. So whenever we are calculating this displaced moving average, we have a specific procedure for that. So we have a specific procedure for that. So here is the formula for your exponential moving average: current closing price minus previous period EMA exponential moving average multiplied with a smooth constant. Smooth constant is nothing but 2 divided by 1 plus n plus previous period's EMA. So this is what the exponential moving average formula is. How to calculate the displaced moving average? So first we have to take the 3 periods moving average, specifically the simple moving average. Then we have to find out plus 3 or minus 3 displaced moving average as per the 2 by n plus 1 formula. Means 2 divided by 3 plus 1 means that you have to take, and that factor either we have to plus or minus it. Then we have to take some Fibonacci approach to derive that buy or sell entry. So I'll just go in detail how we should calculate. So we have calculated, this is the closing price, this is 3 days exponential moving average, this is simple moving average, this is exponential moving average. Displaced moving average of period 3 is calculated in this order. Whatever the G column, 3 period exponential moving average you got, add with 0.5% of the G, means 0.5 multiplied with 8810, which is the 3 period exponential moving average, divide it by 100. So this is displaced moving average plus 3. If I will go for the displaced moving average minus 3, same order I have to do here. Exponential moving average, 0.5% I will take it. 0.5% I can take it, so that I can get those means. So I'll just little bit increase the font of this Excel so that it can be visible. Some people are saying that it is too small, so they are not able to see that. So let me use the font size to say 16. So this is okay. So displaced moving average plus 3 minus 3. So this is the formula for that. So whatever the exponential moving average we are taking, plus 3 means we are finding out 2 divided by plus 3 is 1 plus 3. So 0.5 percentage of the exponential moving average, that we are adding it. So that we are adding it. Same way, minus 3 whenever we are doing means displaced moving average minus 3. Same way you can find out the displaced moving average plus 5 minus 5. Same way you can find out displaced moving average plus 10 minus 10. Whenever you are increasing this plus 5 minus 5 means this n has to change. 2 divided plus 5 means 2 divided by 1 plus 5. Plus 10 means 2 divided by 1 plus 10. So that much of percentage you have to take, add it, subtract it. So whenever we are utilizing this displaced moving average for intraday, so we need to take plus 3 or minus 3. We will not take plus 5 or minus 5. Minimum we have to take plus 3 or minus 3. Suppose if you are going for a displaced moving average of a high volatile stock, which is the stock or index which is having a volatility more than 40%, then you can take plus 2 or minus 2. So this is how you have to take your this is how you have to take your displaced moving average. But plus 3 is the standard. Once you calculate this displaced moving average, then you have to buy entry and the sell entry you have to calculate. So buy entry, whenever you are calculating, you have to take the 3 period moving average, exponential moving average, added with the Fibonacci ratio, 0.382 Fibonacci ratio, multiplied with the displaced plus 3 displaced moving average divided by 100. So this is how buy entry will be calculated. Sell entry, whenever you are calculating, same way you have to do it. 3 period exponential moving average, subtract it from 0.382 times of your minus 3 displaced moving average. So percentage of 0.382 times of this divided by 100. So by this way, sell entry. So once you are getting those levels, what is your maximum target you can get? 1.618 times of this thing is your maximum targets, you can get it. So this is how we should calculate the displaced moving average, its buy entries and its sell entry, and it is for the intraday. So whatever you are calculating for 13th February, so it will be valid for the next trading day, which is for the falling on the 16th February. So this is what you have calculated for the 13th February. So what happens on the 16th February? It has opened at 8,900. Your buy entry was 8864. You have expected till 954. So you have opened at 900. Way above you have opened 50-60 points above you have opened. So you can say though you have achieved the fullest target whatever you have computed, so better to avoid this particular day, not to trade as per this method. Suppose 16th whatever you have calculated, it is valid for 16th data whatever happened, it is valid for the 18th February. So you have calculated 8889, you have opened at 904, gone to a low of 8983. Sorry, 8983 is the high and you have gone to a low of 8894. So here you are expecting 8889 level I should purchase. So very much you got a chance to purchase it. So you have got only a partial target, maximum target you have not achieved, you have just got a by achieved two specific targets you have got it. Same way if I can just go for the 19th, 18th data, I have taken the displaced moving average. I am just going for 19th data. So you have buy entry was placed at 930, you have opened at 959. So 20 points up you have opened up and you have made a low of 8861. So 8861. So this is 8861 and your sell entry also was there at 8891. So a couple of targets as for this means terms you have got it. So all in all, if you just use this particular technique for your intraday trade, if it is a moderate volatile market, you can get one partial success. You can say for moderate volatile market, whenever the volatility is greater than 20%, however less than 40%, in this case, in this greater than 20% and less than 40% case of volatility, greater than 25 will be the safer side. Your success rate as per this calculation will be 70 to 75%. This is what you can get. If your volatility is more, then this particular concept may not give you good success. Less, then also this particular method will not give you good success. So the processes are very simple. You have to take the exponential moving average. Then you need to just take based on your smooth constant percentage of that you have to take, add and subtract and get the displaced moving average. So calculating the volatility, it is purely yesterday's session I have shown that how you can calculate the volatility, how products and services. So Smart Finance total has now 10 products. So this products comes with a printed book, 3 DVDs having different subjects, and that DVDs covers 4 to 5 hours of conceptual lectures along with the examples and other things. It has different price tags. So technical course covers all this concept of your moving average, oscillator, indicators, everything. This comes with a book and DVD. It doesn't have any software as of now. So, and we have futures and options, pair trade software, we have intraday software, we have a option strategy software, we have integrated tool where you can do intraday positional, all kind of trade decisions you can derive. So all these things are having a different price tags. You can, it is on your screen, you can see that. So all our automated software having an annual maintenance of 3,500. And if you are taking all the courses together, you get enjoy some discount here. Without option strategy software, it costs you 13,000. With option strategy course, if you are going to take a full package, it is costing you 17,500. Besides that, we used to conduct some paid events, paid seminar events every yearly, some 2-3 times or 4 times. So For this year, the upcoming event is on the April 7th, 8th, 9th, 10th. It is a online event. Anyone can join from any part of the world. And the same concept, whatever you are going to learn, that is having 13th and 14th, we are having a live market. We are going to experience those techniques. So topics of those event is outlined here. So what are the free supports you are getting post seminar event? You will get 7 hours preparatory course before you join the program, 3 months of software access to all our software stuffs. You will get 2 days live interactive session, 3 months of email support will be given to you. If you do not want to take any material, just wish to join the program, for you the fee will be 5,500. If you wish to join the program along with all materials worth 17,500, then this will cost you 19,500. If you have already joined any of my paid program earlier, you are a past seminarian, you can register for this event at a cost of 3,500. So previous participant means always definitely you will be having the materials and other things. So this doesn't cover materials and softwares because already you will be having those things. So this is about the seminar, upcoming seminar event. This is about the product, and we have also launched a new product on the futures and option recently this month. Smart Futures and Option course. It is in the English and Hindi, both the languages it is available. Near about a 10 hours course on futures and options. So that details you can find out in our website here. Many of you have also purchased that product. So this is about our products and services. So now, most beautiful part of this moving average concept now. So which you have, most probably you would have not experienced before. So for that, just I am taking here so same way I am just going to increase this particular font size to 16 so that it can be visible. So same Nifty I have taken it here. Just imagine certain things. I have taken 5 days simple moving average, 5 days exponential moving average. I have taken 10 days simple moving average, 10 days exponential moving average. This column I represents the 10 days exponential moving average. So all of you will be knowing that yes, this is the 5. So 5 will color. So 5 days moving average, we are going to color it with this, and 10 days exponential moving average, we are going to color with blue. So whenever the 5 days is above the 10 days, we are saying that trend is up. Yes, here 5 days is 8,842, lower trend is down. Here 805, lower trend is down. Here it is lower, it is trend is down. Here it has become up, so trend has become up. So here it is again become up. 5 days is above the 10 days, it is up. 5 days is again above the 10 days, it is trend is up. Trend is up means the successive prices are moving higher and higher. So this is what you are getting. But one thing very carefully you understand here. So if I just subtract it, here onwards the smart finance technique starts. 5 days exponential moving average minus 10 days moving average, I am taking a spread here. I am taking a spread here. Spread means difference between the 5 days moving average and difference between the 5 days moving average and 10 days moving average. So here I have taken the difference. 5 days moving average 8842 and 8861. So I have taken the difference. So every day I am taking one spread here. So spread, after taking this spread, I have found out the maximum spread. I have found out the minimum spread. So maximum spread and minimum spread I have found out. So you will be finding out very clearly here. So this spread, maximum it has gone to 41. Then the spread has started down. It has come down to 32. So when this spread has gone maximum, your 5 days was 8963 and this is 8922. Very next day it was a consolidation 8961 and 8961 means the average, and if you just go for, this is the exponential moving average, so you just go to the prices here. So here is the spread was maximum 41. So previous day 2nd March you have closed at 8,880. Next day you have closed at 8,928. The spread was maximum. Very next day again you have gone by another 50 point up, spread reduced. 41 it has come down to 33, but prices are moving up. I'm not saying that prices are not moving up. This is the last traded prices I am taking here. So this is the closing prices. So closing prices also let us color in some way. So this is the closing prices. With the closing prices only the spread will calculate. Imagine from here onwards we are just going to calculate. 9,055 was the closing, spread was 41. So from 25 it has gone to 41, prices has moved up. 41 it has fallen down by 32, your prices has come down to 8956. Very next day from 56, though prices has just climbed by 30 points, 30 point it has up, but your spread has reduced from 32, it has come down to 31. So 31. Suddenly you can say very next day this spread has fallen down to -2. It is a great fall. And once this great fall has happened, then it has gone to 60, 52. Your spread is becoming negative. Though you are again gap off here, opened off here, but still you are at negative. And today is the 13th. If you take these things, your spread has come to -45.7. -45.7. So you have moved in a spread maximum of +41, +41.66, minimum of -45.7 spread. So this is what the spread. And if I just take the positive, if I take the absolute of this thing, my average spread is 25. My average spread is 25 because all negative I have converted to positive, taken the average. So taken the average of this one. So here what happens, my average is 25. Suppose if it is now negative, I do not know till what point it will go for negative. Tomorrow if it goes to 8,900, what will be the spread? If it goes to 8,500, what will be the spread? So this average is 25.96. As a trader, what I can think in this order, how I can take benefit out of this trade. So as a trader, what is the things I have, because my average is 25.96. I have taken everything as positive. Everything as a positive, I have not taken as a negative as a negative. So everything I have converted to positive, taken its average. So as a trader, if the recovery happens from now, and this spread which is at the end of the day -45, once it goes to -25, -25.96 or round it to 26, I can think of buying it. And imagine from the -26 of the spread, if I can go to +41 of the spread, then how much profit I will be making. Imagine from negative, once I will go to the positive, how much profit I will be making. So this is also, again, you can just verify in a great way. So suppose if we are going for a verification of this particular things, we are going to verify this particular method in a prolonged period of data, whether this trend is going to continue. So this is the thing you have to mention. So you have taken till 13th, I repeat again. So now on 16th, you have opened at a X price. Initially we have taken whatever the price it has opened off. I'll just sum it off. 8874 we have opened off. Yes, our spread is -17. We have moved above 24, means -24 above we have gone. So it is a time I should purchase. So where I can put a stop loss, I can just have a decremented orders. Whenever my spread is falling to below 24 level, that time only I can make it. So if I'm talking at 8824, it is coming around 25. So 8824, I'll have a stop loss. Stop loss means I am not going to close the trade and come out. If I close this trade, the buying trade at a loss of 50 points, then I'll again be a seller expecting 0.36. So point minus 362 will happen. So this is coming around to 8750. 8750. So 8750. So I'll just note down these prices. 8750, 8824, 8824. So if it is going to say I have entered at 8874 minus 17. So I am saying that it is going to 0 level. So you can say 900. I am just changing these levels where it is taking me. 950. So 0.5. 975. 975 minus 23. So 985. So just go on changing this thing and find out where you can. So you can change, make it as a forward indicator. 8990. So using this spread, you make this moving average, which as a backward indicator, you can make it as a forward indicator. Currently moving average is this 8851. So means as per the 12th market closing, your exponential moving average is 8820 and 8851. 5 days is 8820, 10 days is 8851. Currently you have opened at 8874, 8874. So here, these are the things you have to put it. Current trend suggests that I should purchase. My stop loss this thing. Stop loss this thing. If this stop loss hits and it is coming down, it has all probability to fall down till this point, final. And if all probability goes in favor of me and it is going to go for a positive territory, then I can go for a resistance for this move. So you can get it. 8990 is your optimum resistance based on the opening price of 8874. Opening was 8874. Based on the opening price 8874, for the day your stop loss for the buy trade is 8824. Currently you are buying because your spread is above that. It has come to minus 25 means above, minus 25 below. So because it is negative number. Final target, if it breaks that 8824, then it has all probability to fall down to 8750 level. Because that mean spread will come to that 25 level. If it rises above and goes to 0 level, I can have 8990. This is 0 level. So beyond 8990, you have, if you want to go to if you want to go for a higher level, so means if you want to go for a higher level, you can say means if you want to attain this particular 41 level, so definitely from here your target will be quite bigger. It will be maybe 9050 or 9060. You can say that if 9100 from here you go, it is also not 16. So 9000 from here onwards, if it is a to attain that 41 spread, you may go to 9300 level also, or 250 level also, 200 level also. By this process itself, you can form a AFL, use these things in a AMI broker. You can form a algo trading strategy, form this rule and put it in algo trading software if you have. Or if you do not have those things also, from the opening itself you can judge what is the for the day, what is the resistances and supports are like here. And this is based on we made it as a forward indicator. The 5 days and the 10 days moving average, what you have seen on the chart, what you are observing in the chart, just by introducing a new concept on the spread, you can know it before where your spread, where your moving average is going to change in future, at what price point, moving average will change their behavior. Where your good support is standing, 8824 level. If this support is broken, 8750 level, it can come to attain that minus 36 level of things. And furthermore, if it breaks, it will be a final fall, means it will be a bigger fall, and it can create a new level. And if it rises above 8990, you can have a higher trajectory also. So only 5 days and 10 days exponential moving average. Using this thing, you can make a fantastic trade decision. It is also safe for the commodity. So it is also safe for the commodities things. You can utilize these things for positionals. You can just enhance to a bit more. So 10 days with 30 days or something if you can take. So it can work out good for the positional trades. Any questions in this? Maximum time you can get this kind of spreads hitting on this particular price action. So this is also you can utilize. And other way also is there for the Fibonacci principle, how you can utilize this thing that I am not taking today. So see, this same exponential moving average and 10 days and 5 days moving average, many of you will be seeing in the chart, 5 days is seeing this one, 10 days is this one. But how you can utilize this thing? Once that crossover happens, don't think that there only the science ended, there only the concept died, nothing more than is available in this. Just to see if you add a spread concept to this and start using the spread concept, you can make this exponential moving average as a forward indicator. Today market open at 8874. I am thinking that yes, based on the opening prices, it is very good to buy this stock, buy the Nifty. However, I will have a stop loss at 8824 because there only I am falling below my mean spread. If I fall below that, then I have all probability to touch 8750. If I maintain that 8874 above, I have all chances to touch 8990. So this is based on this particular mean spread I have got. Provided if I maintain in the minus 17 to minus 15 only, minus 16 only, then my targets will be lesser only. But these are the optimum targets I can get it. And if I break below 8750, I have a free fall zone because I am crossing that mean spread of minus 36. I am crossing it, so I can go to any region. So this is how you can make utilize of those particular moving average. In the first program in which I am just giving this spread technique to you, however, we have tested it for years. So you can say, Padmanabhaji is asking that if it is opening at 8720, 8730 on Monday, then also you are at 44 level. So you can still think of selling it. There is nothing wrong if you are selling because your spread situation is not changing. Spread is way means near to that level is there. Keep a stop loss of 850 and keep selling it. So nothing wrong in that particular thing. But once it moves to 8,850 above, you have to change your strategy to be a buyer. Definitely you can sell. Stop loss will be definitely, it will be a 8,850 I have told you. You can use the simple moving average, Mr. Vijay Trivedi ji. You can way. So whenever you take 5 period and 10 period, so that time definitely these spreads will definitely come down to a great way. So if you have any chatting software or anything to help you in that, so definitely you can make use of this techniques in a great way. So if you are taking 5 period and 10 period, so just to take for 4 to 5 such spreads you can form, then you can start trading. So in that basis it won't be too big differences you may not get. And yesterday also we have taken in the GAN angle basis one level 8,808. So today you have opened at 8,874. So 8,000 yesterday we have taken it. If it is going to 8,815 above, we will buy till 8,854. But we have opened at 8,874 level today. So the new levels is being come in this order. 81 you should purchase, your stop loss will be 8866 as per the Gann angle and volatility. So if it is slipping below this, first cycle will complete at 8836. So first cycle will complete at 8836 in the downside. If it falls below 8836, it will come to 8798. If it goes to 8798 below, then it can come to 8760. And if it further falls 8760 below, it can go to 8722 level also. So these cycles, if you see today 5 cycles it has created, 8722, if you can take it, it can go to 8684 level. 8684 level it can go. So you can say it has gone to 8652, then it settled at 8684 level. 5 cycles it has created, downward cycles. If it is 8684 you will take, you will get a close level near to 46 it was there. So you have gone till 55, which is just this level. So based on that, I have told you once one cycle is penetrated, till 5 cycles it can continue, 3, 5. So this has proved today also in this particular method. So yesterday what we have taken, that only I have shown you today. So this is what we have done yesterday. In commodity, you don't have a options to hedge, then definitely solution is stop loss. Trade goes against you means you have to put a stop loss and come out. So yesterday's session, I have whatever the things I have taken. This Excel sheet I will be sending it to the people, those who have joined the program. If you have joined the program yesterday, you will get definitely this Excel sheet tomorrow. So you can start observing this thing. But one new approach of this moving average you have learned today. We have converted the trailing moving average to a leading moving average concept. So try to follow this technique and get more clarity on this. So with this I will be ending today's session. Any product related queries or anything, you can feel free to contact our Chennai office. Our numbers are given here. You can say 98403, this number, or you can call to our Mumbai, these 2 numbers also there. So any product related queries you can call there. I have not sent the Excel sheets. I will be sending it tomorrow. Fine. New persons, there is you have to pay for seminar 5,500. We never take only the old participants can join in that. If you think that stops are useful for your trading, one time you can learn and you can able to be a wise trader, then you can think of joining that program. That program is many new things you will be learning in that. So our programs, those who have joined, they have already taken the benefit of that. So we always teach the new concepts and we also give the best price in India. Nobody used to give this kind of stops freely in the market. So we promote the cause, we give you a method which can work in the real market and you can test it. Not only now, many people used to test our concept for years, then only they used to come for a seminar, they used to come for a program. So it may go well with you also. If you have not taken any smart finance product, don't be in a hurry. Take your own time, learn these concepts, whatever we are giving freely. Then if you think that it is useful, and it is prices are reasonable, affordable, then you can think of joining the program. Because those who have joined, I never used to advertise that things that many people are giving the opinion, they have already joined our program, they have taken benefit of our program. I never used to publicize in this that yes, someone has told this thing, because all of you are in a remote place, you may believe it and may not believe it, but those who have joined this program, they have a excellent feedback for our things. We never give any free demo software also, because only concept we used to teach. Softwares, if you want to use our softwares, you take a paid demo software. Paid demo softwares are available, but free demo software we never offer. Concept you can able to use at any point of time. Currently we do not have any plan to have a program